You deposit money in a bank. Safe, regulated, insured. Now imagine most of the world's credit doesn't live there anymore. It lives in the shadows. And right now, end of 2024 data just released, those shadows hold $256.8 trillion, more than traditional banks control, more than half of global financial assets, and almost no one is watching them the way they watch your local branch. This isn't conspiracy. It's the Financial Stability Board's own numbers. Non-bank financial intermediaries, hedge funds, private credit funds, money market vehicles, investment funds, insurers playing in the same game grew 9.4% last year, double the pace of real banks. Why does that matter to you? Because credit is oxygen to the economy, and most of it now flows through pipes nobody built regulators to monitor the same way. Flashback a decade. Post-2008 rules squeezed banks hard. Capital requirements, stress tests, liquidity rules. So the money went elsewhere. Smart money. Pension funds hungry for yield. Corporations needing fast cash. Investors tired of 0%. They found shadow players who could lend quicker, looser, higher return. Private credit exploded. Hedge funds stepped in. Even insurers got creative. Result? The system got more efficient on paper. But efficiency hides fragility. Here's the simple version. Traditional bank takes deposits, lends them out, holds reserves. Backed by central bank if things go wrong. Shadow player takes money from investors, your retirement fund maybe. Lends it directly, often to companies banks won't touch. Uses leverage, lots of it. No deposit insurance, no automatic central bank lifeline. They borrow short, lend long, just like banks. But when panic hits, they can't print money. They sell assets fast. And if everyone's selling at once, markets freeze. We saw glimpses. 2020 dash for cash, Archegos blow-up, UK pension crisis. Each time central banks had to step in anyway. Irony? The shadow system is now so big, it's too big to fail quietly. Reveal uncomfortable truth. The math is brutal. Narrow measure, the risky part, $76.3 trillion and growing 12.7% last year. That's credit intermediation without the guardrails. Banks lend to shadow entities too, over $1 trillion in the US alone. So when shadow players stumble, banks feel it. And when banks feel it, you feel it. Higher borrowing costs, tighter credit, or worse, contagion nobody saw coming. Contrast hype versus reality. Wall Street calls it innovation, democratizing credit, filling gaps banks left. Regulators call it a blind spot. The FSB warns data gaps, incomplete reporting, no global definition even for private credit. Yet assets keep piling up. Hedge funds like Citadel tower over banks, literally in New York. Private equity giants lend to governments now. Power shifted, quietly, without a vote. Longer perspective. Stakes rise. Zoom out. This isn't 2008 Redux. It's different. More interconnected. More leveraged in places. Less transparent. If a big shock hits, rate spike, recession, geopolitical freeze, shadow players could amplify it. Not cause it. Amplify it. Faster than banks ever could. And the backstop? Still taxpayers. Still central banks. Because when $256 trillion moves, someone catches it, or it crashes everything. Close. Unresolved question. So ask yourself, we built rules to stop the last crisis. But what if the next one isn't hiding in a bank? It's hiding in plain sight. In the shadows we stopped looking at. Pause. Fade out on quiet tension. Who really pulls the strings now?